Hello, 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 powerful people. Welcome to the mini training. Thank you for being with me today. I'm Millen, Livis, holistic financial independence mentor. I help people who struggle with money worries and anxiety about their financial future to never worry about money again. Today's topic for this training is market losses are frightening. Should you sell your stocks if you invest in the stock market? Before we begin today's training, I have a quick announcement. You are invited to a powerful, filled with golden nuggets, 5-day live virtual masterclass, Money Mastery, where you will discover and practice 5 particular habits of wealthy, successful people. We start on May 9th. No credit card required to attend. It's my gift to you. But you've got to register for this masterclass at this link. Here's the link for you to register, okay? Fear of danger is healthy. It certainly has an important role in human evolution and survival of species. It kept humans alive for thousands of years. And in the modern history of humanity, fear of physical danger triggers natural survival instinct and often does help survive, right? But for investors, fear does not help make rational decisions. After all, more often than not, our fear is rooted in a sense of uncertainty rather than a need for survival. So investors usually regret choices made from a place of fear. Most people feel very uncomfortable with uncertainty. It causes worries, stress, can even lead to expensive mistakes. For example, during the 2008 financial crisis, many people panicked and sold their stocks and properties with very significant losses because they were afraid that they can lose even more. In 2009, 2010, there were great investment opportunities, but not many investors had the guts to jump in. Some did. I was one of them. That was the time when I made my best investments that grew over 300% in the next few years. And here's another example. Ronald Wayne worked at Atari with Steve Jobs and Steve Wozniak. These 3 brilliant minds started Apple Computer. Ronald Wayne was a 10% partner. And when Steve Jobs took out $15,000 loan for a purchase order, Ronald was very upset because partners had to personally guarantee the company's debt. So Ronald was so pissed off that he sold his 10% stake in Apple company back to Jobs and Wozniak for, get that, $800. He allowed his fear to be his guide in his investment. It was a very costly mistake because his 10% stake in Apple would be worth nearly $300 billion now. Allegedly, when sold the original contract that he signed with Steve Jobs for just $500, and it was later auctioned for $1.6 million. So why I'm sharing with you these examples? Because they teach us a valuable lesson. Temporary feelings can lead to irrational, expensive decisions. And investors must not fall into these emotional traps. Okay, right now investors are fearful. War in Ukraine, political tensions at home, inflation, high gas prices, concerns about recession. In an environment like that, it's easy to fall into the fear and anxiety trap and pull the sell trigger on your stocks positions. And many investors do exactly that, which only reaffirms the volatility in the markets that we've seen so far this year. Yet in times like this, we've got to remember the lessons of Ronald Wayne and of all the fearful investors who sold their assets for pennies on a dollar in 2008 and 2009. I hear many financial pundits on TV and social media say that buy and holding to your assets during market volatility is an old world strategy. Some also remind people that in times like this, it's more important to have a return of your capital than return on your capital. If you could only, when you sell with big losses, if you only could return your full capital, which you can't because you sell with big losses. Look, I'm not a licensed financial advisor, so I can only share with you what I believe in, what I do with my own investment portfolio, and why. So, in my opinion, any investment, whether it's building your business or investing in stocks or investing in cryptocurrencies, etc., have elements of risk. Being an investor, similar to being an entrepreneur, means to be able to take risk. Being an investor, just like with entrepreneurship, means to be able to manage your investment risk and to be able to manage your emotions. Remember this, investors have rare power. We can choose when we lose. Lower valuations of assets, stocks, or cryptocurrencies or properties are paper losses. Paper losses are only realized and become financial losses once we choose to sell assets when their valuations are down. Often we experience the most devastating losses when we sell too soon for the wrong reasons, like panicking over bad financial news headlines. Of course, there are times when choosing to play it safe are practical. Of course. That's why, as an investor, you must know how to manage your risk so you won't lose sleep over your paper losses. And most importantly, it's wise to accept the uncertainty and move against the crowd, which is running for exits. That's called contrarian investing. So, in my humble opinion, now is one of these times. That's why, in the face of all the fears out there, I'm still bullish long term, meaning I'm still enthusiastic or positive about market performance long term. I believe that market will rise again eventually. And even though my investment accounts right now have been seriously impacted negatively, right? I'm not hiding this. I haven't sold a single share. That's because I believe in the power of fundamentally strong stocks over the long term. And that's the kind of stocks I like to invest in. So, to summarize the lesson from today's mini training, I'd like to use this wise quote from the unknown author. Never make permanent decisions on temporary feelings. Never make permanent decisions on temporary feelings. Okay, that's all I have for today. And once again, don't forget that you are invited to a powerful Filled with Golden Nuggets 5-day live virtual Money Mastery Masterclass, where you will discover and practice the habits of wealthy, successful people. We start on May 9th. No credit card required to attend it. It's my gift to you, but you've got to register for it at this link. Okay, at this link, you can register for this masterclass. You will receive your workbook once you register. So it's really cool opportunity to have this pretty much free coaching. Thank you for watching this training. Have a beautiful, productive day and week. And I'll be back with another quick and practical mini training next week. Until next time, stay in your power, be healthy, be wealthy, be blessed.